Hey guys, welcome to the Kopi Lui channel. Kopi Lui is a channel that talks about personal finance, investing, and in this video we'll talk about 5 asset classes that the rich own. The rich own these 5 types of asset classes, and if you want to buy them, you will be very rich. Very rich.
Oh my god! Wow!
So what is the 5 assets classes? The secret is to own a little of all the 5 types of asset classes and you will become very rich. The first asset classes I'm going to introduce you today is called the equity. Equity are stocks, and if you buy stocks, you can either a co-owner or a shareholder of the company. If the company has 1,000 shares and you own 500 shares, meaning you own 50% of the company. When you own equity, you can make money in 2 ways. The first way is when the stock price increases, which means your equity price goes up when you sell it. You make a profit. The second way the equity investors make money is by receiving dividends from the stocks. This is one of the most popular methods used by many Singaporeans. When buy shares of good companies, you are entitled to a piece of their profits and you generally receive that in the forms of dividends. Dividends are commonly paid quarterly. Examples, companies like Mapletree Industrial Trust, ticket symbol MEAU. MEAU. They typically pay dividends every quarter. When companies pay dividends, you will normally receive an electronic deposit in your account that looks something like this. There are 2 ways to buy stocks. You can either buy stocks by a fund, which is a pooled investment vehicle, or you can buy individual stocks. If you want to buy individual stocks, you should only pick good companies that are knowledgeable and has good track record. It will take some skills and knowledge to do that. Thus, I will talk more about how to assess good companies and what are the factors to consider when picking stocks in my future videos. So if you want to invest in a fund, that will be quite convenient to you, as funds are basically a basket of stocks pulled together to become a nice diversified portfolio. The best way to earn an average market return when benefiting from a stock market without scratching your head on how to pick and analyze companies is to buy funds. So let's be realistic. Because not everybody wants to do it because it is very mafan. Mafan is cause troublesome. So before you decide to invest in stocks, you first need to open a brokerage account. A brokerage account is macam like your bank account, but instead of holding cash, it holds your stocks. There are 2 types of brokerage account in Singapore, namely the custodian account for CDP. Custodian accounts are like MooMoo, Tiger Broker, FSM1, Saxo Capital. CDP accounts are like DBS Vickers, Poems, Maybank, Kim Eng, OCBC Security. Bonds are like the second asset classes I want to introduce. So the second asset class is bonds. Bonds are generally debts issued by companies or government. When you own a bond, you generally become a lender. Bonds are very different from stocks, as you don't own anything but you need to lend money to the borrower. They will pay you interest based on their terms and conditions and the interest rate they offer. At the end of the bond term, you get back your principal amount, which is what you want. So there are 2 types of bonds, either the government bonds or the corporate bonds. Government bonds are issued by government in order to fund government projects. Corporate bonds are funded by private firms which need money to fund their projects. One key consideration to buy bonds is to see their credit worthiness. So they got credit or not. You need to assess their financial situation before jumping in to buy bonds. You also need to ensure that the borrower is in good financial shape. You are quite guaranteed that the interest payments and your capital, if the borrower goes bankrupt, you can kiss goodbye to your money.
Oh, hell no!
One of the safest bonds in Singapore is called the Singapore Savings Bonds. You can check out more information about SSB in my video description below. When you buy SSB, your money is very safe, unless the government goes bankrupt. Else you will receive interest payments twice every year. The SSB bonds is also very liquid, where they allow you to withdraw it before the bond expires. So when we buy bonds, we look at their ratings. It can go from AAA to CCC. AAA bonds, which are basically zero chance of defaulting. AAA companies have a lot of cash flow, so it is very low risk investment for you as a lender. But the disadvantage is that the interest payment will be low, whereas CCC bonds offers outrageous interest, but the risk is very high, as they can be defaulted anytime. So as a bond investor, you may be looking for high interest returns, but don't forget, it is also very high risk. The key to invest in bonds is to strike a balance between risk and interest payments. So bonds are generally safer than stocks, but have lower return. If you want to grow your money faster, you should invest more of your money in stocks and not in bonds. That's why for young people around 20s and 30s, they prefer putting most of their money in stocks. You can invest in private bonds by purchasing bonds funds just like the stock. You can also use your Custodian brokerage account to purchase bond funds. There are many bond funds available in the market, but the most common funds in the market are like iShares, Treasury, Bond Exchange Traded Funds, ticket symbol IEF. So the third asset class is called cash and cash equivalents. Cash is a money that is in your bank account or wallet. So everybody knows cash, and some say that cash is king. So cash equivalents are money that sits inside the money market that earns a bit of interest, such as CDs, 1 month treasury bills, 3 month treasury bills, 6 months treasury bills. So in Singapore, our SSB is much like a bond and also like a cash equivalence, where you can take out money anytime and it is very liquid. So rich people or companies with tons of cash like to park their money in the money market, and this considered as cash equivalents. So it's better to park money in the money market than putting money in the bank, because parking money in your savings account basically earn you zero interest. So your whole cash equivalents is like purchasing shares in the money market. So cash equivalents is something like FDLXX and VMFXX. So you can just buy SSB bonds or open a fixed deposit account with a bank which earns a decent interest and park your money there if you don't want to buy any bond funds. So generally, fixed deposit interest rate in Singapore are less than 2%, but it is better than parking your money in your savings account. Do note that cash and cash equivalents are not meant for long-term investing. Although they pay a little bit of interest, keeping cash is a very bad idea, and it loses values over time due to inflation. And in Singapore, the inflation rate is around average 2% or 2.5%. It depends. So the best way to beat inflation is actually to purchase stocks or real estate. The real estate and the real estate REITs investment trust, which I would like to introduce you to this asset class. Real estate is a property, and it can be commercial, industrial, residential, office. There are two ways to make money investing in real estate. It's like stocks. When property value goes up, you can sell them for a profit. You can also collect rental income when you rent out your property. Real estate is much like stocks. It gives you a combination of growth and income. Many Singaporeans like real estate, and they like to own them in some stage in their life. It is a very simple asset class to understand compared to paper assets like stocks and bonds. So real estate is the only asset banks are more willing to loan you money to own as compared to stocks. Some real estate gurus or investors will invest in real estate and use the cash flow from the rental payment to pay their monthly mortgage. They know how to reap the benefits of using less of their money to generate the cash flow from the rental income and also by renting out their property. This type of investment method requires a lot of capital and risk. Thus, to invest in real estate, you must know the maths. Your maths must be good before you jump in. Don't anyhow jump in. Always check first. So the less capital intensive method is to invest in the real estate investment trust. Basically, we call it REITs. So in Singapore, we are very lucky because we have a lot of high interest rates that we can purchase. So REITs are basically shares of companies that own huge amount of real estate. They are macam like stocks. You can purchase them like stocks from your stockbroker account. Singaporeans love to invest in REITs. Not only they pay you nice dividends, and also the stock price of the REITs will grow. You macam one stone kill two birds. Got dividend, also got growth. You don't need to take up a lot of risk, and you don't need to bother on property maintenance like real estate and all sorts of headache of owning a real property. Simply bochap and take dividends. Sweet, right? But you don't anyhow invest in REITs also. You must also do your homework. Check first before jumping in, as some REITs in the market are like sinking ship. I will share more about REITs investing in my future videos, and also what are the key considerations and indications to look out for when investing in REITs. And you can also use a combination of REITs and stocks to build your retirement income. So I will cover all the core assets classes today, such as the stocks, the bonds, the cash equivalents, and real estates and REITs. There are many other alternative asset classes out there, such as gold, silver, bronze, oil, and gas. You might have even heard of some other asset classes, such as commodities, hedge funds, or even cryptocurrency, such as Bitcoin. But for the other alternative assets, they are not really for me, as I couldn't evaluate the true value of such assets. Thus, I will not proceed further from here. Stocks, bonds, cash, and cash equivalents, and real estates and REITs are the core assets to build a bulletproof financial portfolio so as to achieve your long-term financial goals. The growth of your stock portfolio will come from your stocks and real estates or REITs investment. You can use bonds, cash for income and stability. It also generates some returns for your savings. For more such videos, please hit the like button and subscribe to my channel. Do leave your comments below so that I know what they are your key concerns and what are the key areas to improve for my next video. Thank you and hope you have a great time watching.